Well, markets did see a bit of a fall, a bit of a correction on Wednesday. And let's take stock of how markets have started off or closed on Thursday and started off on Friday. So we'll start off with Europe because that was probably the only region which had not really reacted to the FOMC minutes release. So the hawkish tone from the Fed has led to a sell-off in Europe as well, but it's a more tempered sell-off. The DAX was down around 1/3%. The FTSE was down 0.9%. The CAC 40, which had the most impact among major indices, was down 1.72%, and the Stock 600 was down 1.25% in trade on Thursday. When we look at US indices, the spillover continued, but in a more tempered fashion. The indices closed lower, but there have been two major impacts of the FOMC minutes. One has, of course, been the liquidity withdrawal expected by markets, and the other has been that bond yields have started to rise up. Now, it was just about creeping up since Monday itself. It was at 1.51%, and it reached a peak of over 1.75% in trade on Thursday. And that 24 bip rise has, of course, had an impact on the stock markets as well. So when we look at the Dow, it was down almost 0.5%. The S&P 500 was down around 0.1%, and the Nasdaq was down around 13 basis points. It's traded lower in 7 out of the last 8 trading sessions. So it doesn't look very good for the Nasdaq. The Dow and the S&P also are closing lower for the week at the moment. However, there's light at the end of the tunnel. All the futures on all 3 indices are looking in the green in early trade on Friday. So hoping for that reversal to come across on Friday. When we look at how Asian indices are doing, well, pretty much all indices are in the green. The Nikkei was in fact up 1%, but it's the only index which is in the red at the moment. It's down around 1/3%. The Shanghai, the Hang Seng are up anything between 1/10% to 0.5%. The ASX 200 is up over 1%, and the Kospi is up around 4/5% in early trade today. When we look at the SGX Nifty, though, it's absolutely flat. It's just up around 5 basis points in early trade today. That's how the SGX Nifty has shaped up. Well, we did talk about oil and OPEC increasing its production. However, there has been 2 issues that have happened, one in Kazakhstan, one in Libya. Libya has saw supply outages. Kazakhstan has seen an unrest which has led to a drop in global production, which has seen oil prices top $80 a barrel. It's just below that $80 mark as we speak in early trade today. Gold prices have obviously slid. We did expect that with an increase in bond yields, as we did talk about, 24 basis point increase to the peak. That has led to gold prices coming down sharply. It's at $1,790 an ounce in early trade today. When you look at the dollar index, it's absolutely flat in early trade. It's at 96.2, just where we left it off yesterday. When we look at the 10-year treasury yields, we did speak about it. It was at 1.75%. It's topped that at its peak yesterday. It's come back down to 1.71%. So large fluctuations on that particular quarter of how things are going. Bitcoin has continued its slide along with gold. Bitcoin obviously will slide as an alternative currency given that treasury yields are going up. Bitcoin was down almost 3% in early trade today and is just below the US dollar 43,000 mark in early trade today. That's a roundup of how markets are looking in trade today.